Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about a very interesting company which I think can become the next eicher Motors. So let's understand which is that company and why I'm so bullish about it. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about the company, I'm going to talk about Dixon Technologies Limited, and I did provide that as a multi-bagger play when I talked about the Diwali stock bonanza or even the New Year picks, etc. In many other videos, I have talked about Dixon Technologies as one of the multi-baggers, but there was only one or two slides on it. But this is a comprehensive video on the company and why I think that this could end up becoming the next eicher Motors, and you could easily make 8 to 10 times into it over the next few years if you stay invested. So let's understand about the company. Dixon Technologies was established in 1993, and they are the leading electronic contract manufacturing firm. So what is a contract manufacturing firm? Basically, they get orders from the original device manufacturers or original manufacturers of the product. So I'm sorry. So Dixon Technologies gets orders from different companies. So they manufacture consumer durables as well as electronic products, and they have clients which are best in the business. So clients include CB Plus cameras, Xiaomi televisions, LED smart televisions from Xiaomi, Samsung phones which they have tied up just now, and probably the business would start coming in from this March quarter. They also manufacture washing machines for Electrolux, Videocon, etc. They manufacture AC for Lloyd and many other companies. And also they have got now orders from Jio set-top box, which again they have started manufacturing from this quarter. So Reliance Jio, which have come up with set-top boxes, which are smart set-top boxes, and it is Dixon Technologies who are going to manufacture these products. So basically contract manufacturing companies gets orders from the original manufacturing firms or original companies which sell these products. So they are Dixon Technology itself is a huge brand because they currently own brands in cameras, in washing machines, in LED televisions, in mobile phones, set-top boxes, you name it. In different divisions they are currently manufacturing a lot of products. If you look at the financials of the company, then the sales have grown by around 25% for the year on year sales, and this is I'm taking into consideration December quarter results which have just come in about a week back, and we are comparing that with December 19. So all the sales have grown by 25%, but that has been in decline in the way the percentage decline in terms of growth of sales, because they were growing at around 30-35% sales growth over the last few quarters. So slight decline, but look at the PAT number. They have made it tremendously to around 26.5 crores versus 17.8 crores, and that is a gain of nearly 50%, 49% gain in the profitability year on year, which is tremendous. It is virtually debt free. They did take a slight debt for their working capital and for owning a few companies in their brand and starting up a manufacturing facility from near the port. So they were manufacturing from Dehradun, and then they shifted their base to places which was near to port, and they could export products. And this is what another facet that is going to increase the profitability for Dixon Technology, which I'm going to talk about later on. So virtually debt-free company. The return on equity is 21%, and the profit growth over the last 3 to 5 years has been northwards of 38%. So it's growing at 35-38%, And we talk about Bajaj Finance, we talk about HDFC, AMC, etc., growing at 50%, 45%. This company, which is a small cap company, it has been growing at northwards of 30, 35% for the last 2, 3 years. But yet the stock had remained subdued until the last 2, 3 months or so. So the performance of the stock, which I was coming to, the stock is up around 2.5 times in the last 6 months. So over the last 6 months, it's moved from 1850, with the low it made a few months back, about 6 months back exactly, and from 1850 it is already it touched to 4800 as the high, 4750, 4800, or even beyond that. So that is the kind of move that Dixon Technology have had, with a market cap of 2000 crore turning into 4.5, 4800 crores. The numbers have remained strong all throughout this time, over the last 2 quarters, and the numbers have been strong over the last 1 year, except for a September quarter of FY19. Things have always looked very good for Dixon Technologies. The profit growth has been expanding yearly. So it's not that the profit growth is stable at 20-25%, it has been growing substantially. And this is what has been happening with Eicher Motors. I remember in 2011-12, with their truck business, and later on from 2013 onwards with their RE business, they were expanding profitability and not just growing it, and that is what helped the stock absolutely catapult from 3-4 thousand rupees all the way to 17,000 in one go. So this is what I'm expecting with Dixon Technologies as well. Currently, the stock is trading at 4.5 thousand or so. We could see a big move in the stock in the coming weeks, and that's why I have come up with this video. The company has, or the stock has already consolidated for the last 6 months, uh, for at least 6 to 7 months before this up move to below 3000 levels. So from so if I remember correctly, in 2017 December, the stock made a high of 4400, and from those levels it kept on declining for 2 years. Nearly 2 years it kept on declining and touched a low of 1850. So the consolidation from 1850 1900 levels went on for about 6-8 months, to between 3000 or 2800 on the top side to 2200 on the lower side. Uh, uh, this is breaking out for a huge move, so one has to consider that. So even technically this looks like breaking out for a big 30-40% move in the stock, and then you'll see the stock trade at around you'll say uh, 6,000, 5.5, 6,000. Then you'll think that is a very expensive stock trading at 6,000. I should have bought it at 1,800, 2,000, 2,200 would have been the right price. And then people will start making conjecture that the stock is expensive. Although if you consider its EPS for FY20 would be around 105 rupees. So one has to consider that if a company is producing an EPS of over 100 rupees, then it has to have a price of more than 1000 rupees for sure, that is 10 times, and in most cases more than 3000 rupees for sure. That will be just about 30 times earnings. So taking all this into consideration, the performance of the stock has been absolutely magnificent over the last 6 months. In fact, post listing, the company has done really well, because the listing price or the IPO price was around 16-1700. I think it was around 12-1300, but it listed at around 2000 and then just kept on going up. So this was about the performance of the stock. Now let's move on to whether this is a big moat or not, and why I think this is similar to Eicher Motors. So let's get this straight, that I'm not saying that this will become Eicher Motors, but what I'm trying to tell you is that this could end up being a stock that could trade at 20,000, 25,000 rupee level over the next 7-8 years. and then you'll think that, oh, this was another eicher motor that we could not find out at 2-3 thousand rupees. Basically what is happening is there has been no splits or anything else that is taking place in the stock, and the stock is producing EPS of more than 100 rupees and is expected to produce an EPS of around 150 rupees or so by FY21. So if you consider a company having an EPS of 150 rupees, that would surely trade at around 4500 minimum at 30 times. But since this is a consumer durable company, this is a company that is into different consumer brands, then you have to understand that Dixon Technology might trade at 50-60 times. So if you take in 60 times earnings at 150, then this will be trading at around 9000 rupees. So basically it is growing exponentially. It is growing at over 40% year on year. At least the profitability is growing at 40, 48, 50%, and hence the growth of the stock would be even more. And if you remember my videos on how to pick multibaggers and how multibaggers are made and how the valuations of stocks are taken by the investors on the in the market, then you will understand that if a company grows at around 50% or say 45% on a profitability note, then it will not trade at 45-50 times, it will trade at 70-80 times. So that is considered at 150 rupees EPS. Easily Dixon could trade at around 10,000 rupees. So this is my notion about Dixon being an eicher. Another company that could trade at five digit nominal pricing. uh, the reasons behind it is, number one, strong clientele in many domains. So they are into lighting with CP Plus, they are into mobile phones with Samsung and other mobile phones as well. Along with Samsung, they are into LED televisions with Lloyd, with the Xiaomi, and Xiaomi is becoming a big brand in LED smart television as well. They are into making set-top boxes with the Jio set-top box. They are into lighting with Bajaj and Surya, etc., with smart lighting. They are also into LED bulbs, and they have a major share of around 60-65% of the whole LED business. They have a major share of 70 to 75% of the camera business with CB Plus. So one has to take these things into consideration, that they are market leaders in the domains that they are into. They are also into reverse logistics for mobile phones, where they repair it, etc. And they are trying to build many clients. It's not that they are just resting on their laurels and not adding clients, but they are adding clients. Samsung for mobile phones have been added just about few weeks back, and probably in the March quarter you'll see the change in the numbers, because the manufacturing, the whole quarter would come into picture of manufacturing of Samsung phones. Similar with the Reliance Jio set-top box, with Jio as a client. So Jio set-top box they'll make in this March quarter. Only solely the business or the tie-up happened in December. So all these things augur really well for the coming few months. It's not that the growth will be consistent, it will go exponentially higher, the growth levels or the profitability. One has to also understand that there is heavy institutional and HNI investment. So yes, the promoter holding is around 38% or so, 35 to 38%, something like that. But overall, only 7 or 8% of the free float is with the retail investors. About 93% of the investment is with the big clients, between 90 to 93%, and they will not sell in a hurry. They will try to make 8, 10, 20 times from the level they have gotten. And so if you can buy now, even at a decline to around 4200, 4000, you can easily make 3 to 4 times over the next few years. I don't know when, but yes, for sure over the next few years this could become 3 to 4 times easily, because the market cap of the company is only 5000 crore, just below 5000 crore. Remember that consumer durable and electronic business is in its early stages here in India. It's not that it has picked up big time and out of the 130 crore population, uh, not even you would say 3% or 4% are using the products that Dixon are making. And you see the kind of moat that could have, because this is the biggest factor here in India, that the demand could be huge once earnings increase. And yes, this is a very depressing time for the economy at the moment, but once that changes and the economy turns around, we could see a big move, even bigger move in profitability and sales for Dixon Technology. Uh, Also remember that electrification will definitely help the company, because all their products require electricity, and electrification drive by the government, or once the network reaches even small towns, third, fourth tier cities and villages, then we could see products such as freezers, such as fridge, such as other electronic white goods, and as well as mobile phones, etc., really taking into shape here in India, with a lot more people using them. So then Dixon will get even more opportunity for scalability and for expanding its business. Remember, it is still a small cap, so around 5,000 crore is the market cap, is extremely less. You could say only a market cap of 100 crore dollars is absolutely very less for a kind of business that they are into. They are not just making, say, mobile phones, they are not just making LED televisions, they are making a number of consumer products. So the whole scope of the business, with the kind of market share that they have for all their products and from all their clients, with the kind of clientele they have, once the demand picks up here in India even more for these kind of products, Dixon will have a whole new level of sales and profitability numbers. uh, this is a big play on higher middle class consumption. This is a huge play on the factor that over the next 8 to 10 years, people are going to earn even more than at any stage of Indian history, and then they're going to spend on these kind of products. They're going to spend on mobile phones, televisions for better security at home, and so on and so forth. So one has to consider all this while getting into some kind of business, and that's why I'm looking at Dixon Technology in the same vein as Aisha Motors, because bikes were the fashion and people were at that point of time crazy about buying Hero or Bajaj bikes. But then Aisha came out with the Royal Enfield, which which people tried to import from abroad, and most of the very rich in India used to buy or can only afford to buy a Royal Enfield. But then later on, with the manufacturing coming to India with Aisha Motors, we have seen a lot more people getting into buying bullets, as they say, or the Royal Enfield. So one has to consider how things change, and this is where the point of having more, you can say, duties on import helped Dixon Technology. So there is a lot of duties on import of electronic products from abroad, and that has also helped Dixon Technology and will help Dixon and companies of that sort over the next few years. So, considering as to why it is a big moat similar to eicher, as I was explaining, that Dixon Technologies has also the favor of the government with the kind of import duties that is imposed on electronic products and raw material on of electronic products that has to be imported from abroad. It is the government is trying to increase the manufacturing at home. So companies that are manufacturing at home will get a lot of benefit because of these bans, because companies which are trying to import products and sell here, or trying to import raw materials and make products here in India, are going to suffer, and hence this will give more market share and better fillip for companies like Dixon Technologies. And this is another reason why Dixon could become really big over the next 3 to 4 years. So why a buy on decline? So let's consider that. The valuations is the first part. Currently it is trading at around 50 times current earnings, 50-51 times. But if I consider earnings of FY21, then we will see that the company would have an FY21 earnings of around 150 rupees for sure. The FY20 earnings would be around 105 rupees, and if you consider a growth of even 40% on it, so 145 146 rupees earnings should come in for Dixon Technology for FY21, and at 145 147 rupees it should trade at, even if it trades at 50 times, then you'll see 7500 on the stock. But I believe it will trade at between 55 and 60 times, so at the upper end it could be trading at around 8,500 or so. So currently the stock is at 4600. We could easily see 8,500 9,000 in a year and a half or so. So this could double in the next 18 months. This is my assessment, and one can buy on any declines closer to 4200 or so. The market cap itself is very interesting because the sales of the company is around 4,000 crore for the year, 4,000 to 4,500 crore, and currently the market cap is only 4,800 crore. So it is trading at only one time sales, 1.3 times sales, which is extremely cheap. Normally consumption companies of this sort trade at 4 to 5 times sales easily. And again I say that probably it will not, but because it is a contract manufacturing, not a direct you can say brand, but this could easily trade at 2.5 3 times, 2 to 3 times sales. So if you consider a sales growth of even 25% over the 4,000 crore that they have made, so that turns out to be something like 5,000 crores. So if at 5,000 crores sales you consider it trading at 2.5 times, this will be a 12,000 crore company, which is currently a 4.5 or 5,000 crore company. So 12 and a half from 4,500 or so is nearly 3x from here. Then you have an expectation of a continuous growth. So I'm not talking of a stable growth of 20-25%. I am talking of a continuous growth in profit. So profitability might be at 48%, grow to 60%, 70%, and this is what has happened with Eicher Motors, that when the stock really started moving, we saw profitability expand. The growth in profitability expand from 20-25% to 30, 40, 50, 80, and at its peak of growth it was growing at 80 to 100%, and we could see that happen with Dixon in the coming years because of the reasons that I just mentioned. One more thing is that this will have the PE expansion because of it being a kind of stock that has exclusive for the market, because there is no branded top level mobile company that is listed, there is no branded top level LED television company that is listed, and there is no camera company that is listed, and this one plays the role of all. So this is a proxy on many non-listed firms in mobile industry, mobile phones, LED televisions, cameras, lighting, etc., although Bajaj is listed and so on and so forth. But this is a big play on some of the industries that is doing really well here in India, and that is expected to do even more bigger things over the next decade, and yet is not listed. So people will flock towards Dixon Technology whenever there's a surge in mobile phone selling or cameras being bought, so on and so forth. There's a huge government support, as I mentioned, for the sector, with whatever measures that the government have announced with respect to import duties, increase in import duties of products for raw materials as well as for finished goods products in electronics. So that will help boost business of Dixon, who are manufacturing here in India and which are Indian companies. And remember, the small caps have come back into fashion, and when they do, as we have seen in 2014 to 17, I could see this happening in the next 2.5 years. That small cap will run very fast, and you'll see some of the small caps which will produce very good results, like Dixon Technology, may double, triple, become 4, 5 times before this rally ends. If you look at the technicals of the company, relatively under-owned stock, especially by retail investor, this stock is only 8%, as I said, retail play, and 92% with HNIs, FIIs, DIIs, or the promoters. So this is extremely under-owned. Uh, the short-term support lies around 4100. We saw that after budget, the stock go to 4100, but now it is at 46, 4700 and settling there. We could see a consolidation phase between 4000 and 42, 4300 in the coming few days. So it's not that it's going to run away, but we could see a consolidation. That will be good time to buy. So the two things, we could see consolidation, or we may still witness continuous up move to 6000 levels, but that is the maximum I suppose in this run the stock could go to. So one has to understand that any correction will be a big buying opportunity. So any correction to levels of 4000, 4100 or below will be a huge buying opportunity, but wait for levels of 4250 to 4400 levels to accumulate this stock, and then hold it for the next 7-8 quarters and see what happens. A major breakout could take place above 5000 levels, so one has to consider that as well. So what needs to be done? This is a company that has to be bought on major declines. Keep track of numbers, and probably if the numbers keep on improving, just buy, go ahead and buy, and don't wait for declines to get into the stock. Have a 6-7 year time frame. This will be big, considering that it is into consumption, etc. This could be really big in the coming few years, and it should give very good consistent returns and have less than 5% exposure into the stock. So this was my video on Dixon Technology. I'm a firm believer that this could become really big. Whether it will become eicher or not, I don't know, but let's see. Please like and subscribe my channel, hit the bell icon so that you get my videos straight away when I post it, and kindly support me on Patreon. I would require that for putting videos daily, so kindly do that. Thanks a lot for watching.